Welcome back to the deep dive. You might have woken up recently, seen some pretty striking headlines, lots of market volatility, specifically First Solar, FSLR, taking a pretty significant hit. But here's the thing. This isn't just about one stock, is it? It's really this fascinating, complex snapshot of how policy, economics, investor sentiment, how it all kind of converges and shakes things up. So today, our mission is to do a real deep dive. What's truly going on with First Solar? And, more broadly, the entire renewable energy sector. We're going to try and unpack the multiple layers behind these recent stock plunges. We're talking political announcements, shifting tax policies, interest rates, trade stuff, and of course, what it all means for the future of green energy investments. We've pulled together insights from, quite a stack of sources. Market analysts, financial news outlets, industry reports should give us a good picture.
Yeah, it's definitely a critical moment for the solar industry. And First Solar's recent performance, it's like a perfect lens, really, to understand the pressures, the outlook. It's a rapidly evolving sector. It's definitely far more complex than just a simple dip in the stock price.
Okay, so let's cut right to it then. The immediate shock. August 21st, 2025. First Solar stock plummets. What was the spark? Was this a complete surprise or, had the market been sort of bracing for something?
Well, the main catalyst, the immediate trigger, was a very direct statement from President Donald Trump. He basically announced his administration wouldn't approve new solar or wind projects. He posted it on Truth Social, and I think the quote was, "We will not approve wind or farmer destroying solar," and then added something like, "The days of stupidity are over in the USA." So pretty clear escalation of his stance against renewables.
Wow, direct.
Very. And while, the market might have anticipated some rhetoric, the directness of this coming from him was definitely a jolt.
And the immediate ripple effect on FSLR, the whole sector.
Swift. It triggered a sector-wide sell-off pretty much immediately. First Solar specifically dropped, 6.7% to 6.8% that day. But others too, Blink Charging, Fuel Cell Energy, Nextracker, EVgo, they all saw drops. It just showed widespread investor concern, right, about the future of these projects.
Yeah, underscores how sensitive this sector is to political winds, especially anything touching regulatory approval.
Exactly.
Now, our sources mentioned First Solar shares are, quote, extremely volatile. I think they did 36 moves over 5% in the last year alone. So given that background volatility, why was this particular drop seen as so significant?
That's a great point. And yeah, FSLR is volatile. But the market viewed this specific announcement as, quote, meaningful. Why? Because it came directly from someone who could, fundamentally change the rules of the game, the regulatory landscape, even if analysts, sort of longer term, thought it wouldn't fundamentally change its perception of the business.
The short-term reaction was serious.
Absolutely. It immediately made everyone reevaluate the political risk premium baked into these stocks. What's interesting, though, is even after that big drop, FSLR was still actually up 3.1% since the start of 2025. Yeah, which kind of points to some underlying strength, right? Even with all this short-term noise.
Okay, so let's unpack that a bit more, because that August 21st comment was a fresh trigger, sure. But you mentioned underlying stuff. The solar sector was already dealing with some pretty big policy shifts before that, wasn't it? This wasn't just one tweet out of the blue.
Precisely. Yeah, you're spot on. There was already this deeper undercurrent of policy changes building up. You have to go back to July 4th, 2025. That's when the One Big Beautiful Bill Act, the OBBA, was signed into law. And that budget bill included massive cuts to federal clean energy support. That really set the stage.
Massive cuts. Okay, so the Inflation Reduction Act, the IRA, those tax credits were kind of the bedrock, right?
Right.
How exactly did this OBBA rewrite that playbook? What did it do to those incentives?
Well, the IRA, back in 2022, it gave solar and wind projects a really clear, long runway. You had a 30% investment tax credit, the ITC, or a production tax credit, PTC. And the phase-out wasn't supposed to even start until 2032. Plenty of time.
Okay.
The OBBA basically took that runway and, chopped it down to a sprint. Now, projects are ineligible for those credits if construction doesn't start within 12 months of OBBA's enactment. That means by July 2nd, 2026.
Wow. Okay.
Or if they aren't placed in service after December 31st, 2027. And for residential solar, home energy upgrades, even tighter. Credits are cut if the project isn't placed in service by the end of this year, 2025.
That's dramatic. A huge acceleration.
It really is. It drastically shortens the window for developers, for homeowners, everyone to lock in those incentives.
And then, as if that wasn't enough pressure, shortly after OBBA, President Trump signed an executive order. This is where he said it gets really interesting. How did that make things even tougher?
Right, the executive order. It tightened the interpretation of what beginning of construction actually means. It specifically targeted something called safe harboring.
Safe harboring.
Yeah, previously, a project could often qualify for credits just by spending like 5% of its total budget, a clear threshold.
Okay, relatively straightforward.
This order told the Treasury to restrict that. Now, it requires a substantial portion of the project to actually be built. It moves away from that clear 5% test to something vaguer, a less clear facts and circumstances approach.
Which sounds uncertain.
Exactly. In practice, it means physical work of a significant nature has to be done at the project site itself, not just spending money, but actual building.
So if I'm a developer trying to plan a big multi-year solar farm, this EO basically makes the goalposts for getting my tax credits not just move, but kind of disappear into fog. Is that the takeaway?
That's a perfect way to put it. Fog. Because these aren't just, little tweaks. It feels like a deliberate strategy hitting multiple points to dismantle the financial scaffolding these projects relied on. Long-term planning becomes incredibly risky. Instead of hitting a clear percentage, you're facing subjective criteria.
Which means delays, legal costs, trying to prove significant nature.
All of that. Plus, it's a huge red flag for investors, for lenders. That legal ambiguity can stall projects, drive up risk premiums, or just scare investment away altogether.
Wow, okay. And later on top of that, there are also new restrictions about foreign components, another hurdle.
Yep, exactly. The OBBBA also brought in these Foreign Entities of Concern, or OEOC restrictions. It primarily targets China, but also Russia, Iran, North Korea. Starting with tax years after July 4th, 2025, projects can actually be denied tax credits if they violate these EPOC rules.
How does that work for solar specifically?
For solar projects, it means they have to contain at least 40% non-prohibited components by 2026. That threshold then increases to 60% after 2029. And get this, there are significant penalties, like 20% if you miscalculate.
Okay, that sounds complex to track. Now,
Yeah.
for solar, they really emphasize their U.S. manufacturing, right? Does this EIC policy maybe give them a competitive advantage over companies relying more on, say, Chinese supply chains?
Yeah.
Or is it just tough for everyone?
That's a really sharp question. And yes, I think it absolutely could be an advantage for First Solar. While it's a hurdle for the whole industry, especially those deeply tied into Chinese supply chains,
Right.
First Solar, being the biggest U.S.-based manufacturer, with their vertical integration, they're inherently less exposed. So while others might be scrambling to resource components or risk losing credits, FSLR is in a comparatively stronger position. Still tricky market, but definitely stronger on that front.
Okay, so we've got this dramatically shifted political landscape, huge policy uncertainty. But even as all that was smooth sailing, the basic economics of these big projects face other pressures too, right? What else is going on beyond the direct political stuff?
Absolutely. The broader economy is a massive factor. Interest rates, for instance, they greatly influence the solar industry. Why? Because these projects, whether utility scale or residential, have high upfront costs. They rely heavily on loans.
So high rates hit hard.
Directly. Think about it for a homeowner. A higher interest rate on their solar loan might add thousands to the total cost, makes it unaffordable.
Pushes it out of reach.
Exactly. And for a huge utility project, a few extra points on a massive loan can just wipe out the expected profit. That's a big part of why we saw residential solar installations drop, 19% in 2024? High rates price people out.
But you said the landscape is shifting there. Rates came down a bit late last year.
Yeah.
Any relief in sight?
Yeah, there is some potential good news there. The Fed made those significant cuts in September and December 2024. Benchmark rate down to 4.25%, 4.5%. And more cuts are anticipated in 2025.
Okay.
So, lower rates should mean lower financing costs, better affordability, more demand, more competitive loan options, makes projects look more viable. Could definitely boost investor confidence, maybe help get some stalled projects moving again. Especially helpful for residential customers comparing monthly payments.
Okay, so that's a potential tailwind. Now, despite OBBBA and the rhetoric, what about the IRA itself? Is it still playing a role? Does it still offer any support?
Yes, definitely. Despite the OBBA cuts and the political noise, the IRA itself still provides substantial investment for climate and renewables. Those rebates, those tax credits, like the 30% ITC, they're still technically on the books from the IRA. Now, former President Trump campaigned on repealing it, called it the Green New Deal.
Right.
But he can't just cancel it unilaterally. Its future depends on Congress. So for now, it continues to provide a baseline of federal support that wasn't there before OBBA. It's still a factor.
Okay. And what about trade policies? You mentioned components earlier. Are things like tariffs still impacting the market?
They certainly are. Those ongoing anti-dumping countervailing duties, the AD/CVD, on solar imports from Southeast Asia, they're still a big deal. They raise module prices maybe 5 cents per watt more for tariffed ones, for example.
Which adds up.
It does. And it's causing swelling supply chains. We're seeing more imports coming from places like Turkey and Indonesia now, countries that aren't hit by those tariffs.
Yeah.
So that affects module availability, overall project costs. Now, just another layer of complexity for developers to navigate.
Okay, let's zero back in on First Solar specifically. Given this whirlwind of policy, economics, trade, we saw the sharp drop recently. But how does its performance look if you zoom out a bit? Is this a company truly struggling, or is there more to the story?
Definitely more to the story. Yes, the recent drops were dramatic, eye-catching. But First Solar has shown really strong long-term growth. You mentioned that earlier. I saw a stat, if you'd put $1,000 into FSLR shares 5 years ago, it'd be worth around $2,594 now.
Wow, that's significant growth.
Right. It speaks to the underlying strength of their business model over time. And remember, even after the recent dip to around $192, it was still up over 3% for the year 2025. Now, that $192 is still almost 25% below its 52-week high from last September.
So there's been a pullback.
For sure. But it's not like a total collapse. It feels more like a reaction within a fundamentally strong, though, yes, volatile stock.
That's a fascinating contrast. So with all these headwinds swirling, what are the Wall Street analysts saying? Are they still bullish on FSLR, or are they getting nervous?
They seem remarkably positive, actually. Still a strong outlook from Wall Street. The average one-year price target from, I think it was 34 analysts, is around $213.92. That's like an 11% potential upside from where it was. Guru Focus has an even higher estimate, like 66% upside potential, targeting almost $320.
Really?
Yeah. And the overall consensus recommendation from like 41 brokerage firms outperform.
So positive sentiment remains.
It seems so. Analysts point to First Solar's focus on utility-scale projects, those huge solar farms, and critically, its domestic manufacturing. Those are seen as major strengths that could help it navigate this tricky policy environment better than competitors who are more focused on, say, residential rooftops.
Okay, so it sounds like the whole sector is maybe at a crossroads.
Yeah.
Or just getting really mixed signals. FSLR dropped hard, but how did its peers fare? Was it the same story across the board?
It's definitely a mix, and that divergence is really telling. First, Solar's drop was sharp, yes. But look at Sunrun, heavily focused on residential. They also dropped significantly, around 7%.
Okay.
But then others like Enphase Energy, down maybe 3.35%, Solar Edge down about 5%. They fared comparatively better.
Interesting.
It really highlights how complex these policy-driven market dynamics are. Different business models, different customer bases, residential versus utility, different tech niches. They all react differently. It's definitely not a one-size-fits-all impact.
So looking ahead then, for the rest of 2025, maybe into next year, with all these pressures, political, legislative, economic, what are the big opportunities and challenges we should be watching for in the solar sector overall? What's the road look like?
Well, on the opportunity side, the optimistic trends, we should expect to see continued growth in battery storage adoption. That's huge for solar, right? It tackles the intermittency issue.
Right, solar when the sun's not shining.
Exactly. Also, continued growth in community solar projects, making solar accessible even if you can't put panels on your own roof. There's a big focus on grid modernization, too. We need to upgrade the grid to handle all this new solar power effectively.
Makes sense.
And definitely a continued push for domestic manufacturing of components, driven by policy, yes, but also just supply chain security concerns. I mean, through April 2025, solar was like 77-78% of all new electric generation capacity added in the U.S. That underlying demand trend is still powerful. But the challenges aren't going away either. Persistent challenges.
Like
potential supply chain issues are still there. Companies constantly adapting to trade rules. Those trade policies impacting module availability and price. Bureaucratic hurdles in getting projects connected to the grid that can be surprisingly complex and slow things down, especially as more solar comes online. Need transmission upgrades, substation work, and a really big one, the need for a skilled workforce. You need trained installers, engineers, maintenance folks to actually build and run all this stuff. Without them, growth hits a ceiling.
So wrapping this up, what we've seen with First Solar and really the whole sector, it's this incredibly complex mix, isn't it? You've got the immediate political statements, these deeper legislative changes to credits and components, and then the underlying currents of interest rates, trade. It's way more than just one stock dropping. It's a window into all these forces.
That's exactly right. And despite all these headwinds, which are significant, the solar industry has shown remarkable resilience. It's still driving huge private investment, still adding substantial capacity to the grid. It really is an industry that's actively adapting, using new tech, strategic positioning, proving its long-term viability even when things get choppy.
So maybe the final thought to leave our listeners with, given these dramatic policy shifts, these economic pressures, what does it really mean for the long-term bet on green energy investments? And maybe more interestingly, how will innovation itself adapt when the regulatory future feels, well, a lot less certain? Definitely something to keep thinking about. It's a question that's going to shape the energy world and probably our investment strategies for years to come.